Hello everyone, welcome to Tradeline FX Africa. Today's topic is recession. My name is Tondou Andrew. I'm a market analyst and a trading educator. Before we continue, here is our risk statement. Recently in the news, the word recession has been almost every day. If you are listening to any economic news, business news, you see that there's a lot of talk about recession, recession, recession. It comes with a lot of packages as well as its baggages. Okay, so is the world really heading towards a recession? So we're doing an investigation on that. All right, so let's talk about the sanctions, which is very popular news right now. The sanctions on Russia by the Eurozone. Okay, this has caused a lot of havoc in the financial market. The price of oil has been shooting up and going down depending on what the agreement between Russia as well as other countries of the world or the other superpowers. Okay, so this has affected a lot of things in the financial market. For example, European Union has agreed to ban all Russian oil imports which come in by sea from Russia by 90%. If you know, Russia is the second largest exporter of oil in the world, and another thing is that they supply majorly, okay, most of the European market. So with this particular sanction, it's going to be like a backlash on the European market. Right now it is they are trying to give like 90%, but right now 75% as at the time of making this video is already in progress. So they are willing to add like 15% of more sanctions to Russia by the end of the year, and this will cut the European nations oil imports from Russia by two-thirds. Okay, so this is a red flag to Europe, which is going to affect their economy as in very bad. So as well as other countries also had given their own bans to Russia. Okay, the US, the UK. Okay, they've banned Russian fossil fuels. Okay, in fact, there's a lot of accounts, Russian accounts offshore in the US as well as in the UK that have been frozen. Russia has failed to pay their debts, which is for a long time. Okay, so this is affecting Russia, and Russia is affecting the whole world. So with all this happening, the world recession has been looming. So inflation also is another issue. Okay, so when there's high cost of living, consumers are having issues trying to buy, purchasing power is low. This is a pointer that a recession is looming. Okay, recently there was a lot of rate hike. Okay, as at the time of this video, there's a lot of rate hikes. So a lot of rate hikes from the US Feds, from Powell. Powell gave a new. The US had to raise uh, their interest rate by 75 basis points. Okay, and of course they are still willing to raise it again in September. So wait to see if that happens. Next is the English, the UK. Okay, this is Andrew Bailey. Okay, the UK is also raising their points by 50 basis point. Of course, let's see how it goes. So there's a risk of recession also in the UK market. Then the European Central Bank, of course, they are also willing to give an interest hike by 50 basis point, which is for the first time in 11 years. Okay, so this is something that we have been watching out for, and we are trying to see if it's going to affect the European market. So what is a recession? Let's define what a recession is. According to Investopedia, a recession is a significant, widespread and prolonged downturn in economic activity. Because recessions often last 6 months or more, one popular rule of thumb is that two consecutive quarters of decline in a country's gross domestic product GDP constitutes a recession. Okay, So when an activity for two consecutive GDP has been dropping, so we say a country is in a recession. The IMF had downgraded its global forecast in April to about 3.6% growth in both 2022 and 2023. So the IMF is forecasting that there's going to be a global recession. Of course, when the IMF speaks, you should listen. So they expect the world's economy to grow at 3.2% in 2022, which is down from the previous 6.1% in 2021. So the IMF is predicting and is raising a red flag for the global economy. Of course, in 2022 it was worse at 2.9%, so they are, which is slightly above the 2.5% growth. Okay, so this is automatically pointing to us that IMF is seeing a global recession looming. Let's get back to Russia. So if Russia potentially shuts the flow of gas to Europe, then inflation will increase and global growth for 2022 will drop to 2.6%, which is just a hair away from the hot zone, according to the IMF. Okay, so as you can see right here, growth forecast is to slow to 3.2% this year and 2.9% next year, which is downgraded from 0.4 and 0.7 percentage points. So as you can see right here, the world's GDP is no longer what is predicted to be. So there's a looming recession around the corner. So that scenario, according to the IMF's warning, could prompt an official recession by 2023, causing global growth to tumble further to just 2%. That level of anemic growth has happened just 5 times since 1970, according to the IMF. So this is a prediction by the IMF based on their calculations and their statistics. Then I love this. According to Pierre Olivier Gorenchas, IMF's Director of Research, he said the world may soon be teetering on the edge of a global recession only 2 years after the last one. Remember, the last one was previously at during the pandemic, the heat of the pandemic in 2020. So when the IMF is speaking, like I said earlier, the world should listen. Okay, so they are talking with a global tone, and we need to listen to find out what they're actually trying to say to us. Okay, let's talk about the types of economic recessions. We have the boom and bust recession. In the boom and bust recession, the economy bounces up and down as you can see on the chart while the overall growth increases. So when it goes above, okay, above the red line, we say there's a boom in the economy, and when it goes below, we say there's a bust in the economy. What governments do is that they intervene either by increasing or raising interest rates or lowering interest rates. This is what has been happening of late. Next is the balance sheet recession. Okay, this occurs when the economy is overloaded by debt. So a lot of people have borrowed, a lot of loans has been collected, and servicing of the loan was no longer feasible. So what happens is that the economy undergoes what is called a balance sheet recession. Okay, balance sheet recession is caused by when businesses and consumer spending habits has gone wrong. Okay, so it's very difficult to come out of this particular recession. So next is depression. Okay, in a depression, as we know, as I've told you earlier, that for a recession to occur there needs to be a decline uh, in two consecutive GDP results. Okay, but for a depression to occur there needs to be a decline for a long time. It has to be for a very long time. So when a recession lasts years or decades, it automatically becomes a depression. Okay, this was what happened in the United States in the 1930s. So they went through what is called the Great Depression. Supply side shock. Supply side shock is caused by global events like pandemics, okay, like the recent COVID-19 pandemic, okay, as well as other global events like natural disasters and wars. Of course, we will not fail to mention the Russia-Ukraine battle that has been going on. Okay, so this can cause a lot of nations and countries to go into recession. This is what is happening in the world right now. So the IMF is showing us that there's a pointer, there's a red flag, and everybody should take note that a recession may be looming around the corner. So types of recession recovery. So after a recession, there is a recovery phase. Okay, it's a recovery phase of the cycle. So on the recoveries, we get to know how nations, what are the pointer, what shows that a nation is recovering. Okay, so let's look at how it looks like. Number one, the V-shaped recovery. Okay, in a V-shaped recovery, this recovery does not last long. So after the dip, okay, there's a quick recovery and the economy goes back to its original path and even above that. Okay, so this is a very good recovery. Okay, next is the U-shaped recovery. This is similar to that of the V-shaped recovery. Okay, the economy bounces back to its original growth, but this takes a longer period of time. Okay, this can be due to a decline or even a stagnation. So it takes a longer time to get to the recovery of the original path. Okay, W-shaped recovery. Okay, this is a very complex one. Okay, what happens is that there was a dip and there was a recovery, but there was a second dip after the first. So this is a very it has a lot of a bad impact on consumers. Okay, it drops the level of consumer confidence and causes fear in the market. So a lot of people will be afraid, even though things are recovering, they are not sure if it's going to last. Okay, let's talk about the L-shaped recovery. Okay, the L-shaped recovery has a long-term impact on growth. That's one of the issues with the L-shaped recovery. So it can permanently lower the GDP's growth trajectory and it can approach depression levels. So this is a very bad type of recovery. Okay, even though another issue is that price the GDP will not reach the original path. So it's a bad this can be caused by slow economic recovery, okay, as well as high unemployment level, as well as investors too. There's a very low level of investment coming in, so it's a very bad recovery. Okay, it's a recovery, but it's that bad also. All right, K-shaped recovery. In a K-shaped recovery, what happens is that different segments of the economy are recovering at different rates. That's the issue with that. So different segments are recovering at different rates. So it will give us what is called the K-shaped recovery. Okay, the tech industry may be moving at a higher speed in recovery, but maybe the agri sector may be trying to catch up. Okay, so this is a K-shaped recovery. Next is the normal square root recovery. The normal square root recovery looks like the normal square root. Okay, as you can see up here, it's looking like the square root. Okay, so what happens in a normal square root is that the recovery ends up higher than the original. Okay, this is due to the heightened period of growth, but does not continue that trend. So as you can see above there, there's a flattening above, so it flattens out for a period of time. Okay, so this can be caused by a lot of issues like what is called the supply constraint. So supply constraint can make it to remain at that particular level. Okay, so we have the inverted or reverse square root recovery. This is just the opposite of what happened to the normal square root. Okay, so what causes recessions? Number one is sudden economic shock. Okay, when there's a sudden economic shock like the COVID-19 pandemic, as well as the Russia-Ukraine war that is ongoing right now as at the time of recording of this video, okay, such kind of things cause a lot of effects on the financial market on different countries, but this one is causing a global effect, okay, such that we are receiving warnings from the International Monetary Fund. So sudden economic shock can cause recession. Next is excessive debt. Okay, when people can no longer handle the cost of servicing their debts, a lot of loans have been collected, and it got to a stage that people can no longer service their loan. This can cause a lot of bankruptcies, and recession is inevitable. Next is asset bubbles. Okay, this happens when there's a lot of when investors are moved by emotions. Investors are very optimistic, in fact too optimistic, because there's a, for example, there's a bullish run in the market, there's a strong economy. So what investors do is that they keep greed enters everybody, and they keep buying and buying and buying and buying, because there's a lot of prosperity going on in the market. Then what happens is that there's a pop to the bubble. What happens next is there will be what is called panic selling. When there's panic selling, it will lead to a crash, and when the stock market crashes, what happens? A recession. Too much inflation. Too much inflation. Okay, when there's a steady upward trend in prices over time, okay, prices of goods are very expensive, consumer spending is dropping on the decline. So, and too much inflation is very bad for the economy. Okay, so what do central banks do? They come in and they do what is called, they raise interest rates. Okay, and when the interest rate is even too much, again, that's another issue. So that can cause a depression to the economic activity. So there's always the reserve, like for the US, they have to come up and increase interest rates, and so on and so forth. So all those things are going to cause a recession eventually. Last but not the least is technological change. Okay, like what happened during the industrial revolution, a lot of technological advancements, okay, were being brought up, a lot of inventions. So a lot of people, a lot of manual workers uh, who couldn't keep up, their services were no longer needed. Okay, so that caused a lot of it made their work obsolete. And another thing right now that is happening is the technology, the AI and robots. Okay, of course, robots are as already here. They are not just coming in; they are already here. So a lot of jobs will no longer be necessary anymore. So this will cause what is called a recession. So what's the difference between a recession and a depression? Okay, a recession and a depression, like I said earlier, the difference between a recession and a depression, in terms of a depression is actually a recession. Okay, the difference is that there are greater job losses, higher unemployment, steeper declines in GDP, and this is the last one is a depression lasts longer, very important point, and takes more time for the economy to recover. This happened in the US in the 1930s. Okay, okay, for over a decade. All right, so this is what happened. This is called the Great Depression. Can you see the US economy? Okay, the strongest economy in the world faced what was called a Great Depression in 1929, which lasted through 1933. Okay, it even went through, and as well as it didn't recover until after the World War II. Okay, so it was a very bad period for the US. Can you see people are queuing up to get soup, coffee, and donuts for the unemployed? So the US had to face this. Okay, can you see right here? During the Great Depression, unemployment rose by 25% and the GDP fell by 30%. So that was a very bad period in the history of the US. Can you see? This is their job advert, this is their CV. they're hanging it on their neck, so they don't need to see anything. Once you see them, you know exactly what they want. Okay, so the US, there's a word that was been going on to in the US. Okay, after the report came out, they said that they're in a technical recession. Okay, US was in a technical recession after the second GDP, real GDP came out. Okay, for the second quarter, as you can see, the real GDP for the first quarter was a negative minus 1.6 for the first quarter of 2022, and for the second quarter it was 0.9% minus 0.9%. So these are the two consecutive decline in GDP. So this was the pointer that the US is in a recession, but we have to wait because somebody has to tell us why. So of course we will know as we continue. Okay, so this is one of the pointers that two consecutive declines of GDP is pointing to a recession. So there's another definition we need to know. What is a technical recession? A technical recession. Okay, so a technical recession is when a country faces a back-to-back decline, okay, in their GDP, like I said earlier, for two consecutive quarters. So a technical recession can just be just for 2 quarters and that's all. Okay, it's just short duration and it is caused by the single off event. All right, so for example, the single off event that is happening right now, we will say simply is what is happening in Ukraine and the war with Russia. All right, so let's get back to IMF. Okay, according to their World Economic Outlook update for July 2022, they said that the world's economy is gloomy and more uncertain. So it's gloomy and more uncertain. Like I said earlier, when the IMF says that the world's economy is gloomy and more uncertain, we should know that they are not joking. Okay, and of course the focus was on the three main economic powerhouses: the United States, China, and the major European economies. So for the US, there was a lot of there was less purchasing power for consumers as prices rise, leading to lower than expected spending. So price of goods, inflation was very high. Okay, of recent. Okay, but of recent, the July CPI was low, so at least the US are like right now very at least the people in US are very happy, even though investors are not happy because the CPI result was very low. Okay, so this was good for the US citizens but bad for investors. Okay, so another issue that happened was that the NFP was expected with a forecast of 250,000. Okay, but it came out a surprise, so it gave about 528,000, which was a surprise, like we said earlier. Okay, so this surprise made it so the job in the US, okay, a lot of people got a lot of jobs in the US. That's what it means. So this is a pointer that they may not be in a recession yet. They may not be in a recession yet, but the target for inflation for the year was 2%, but right now it's above 2%. So a lot of analysts have been saying that there's a possibility that they may get lower GDP for two consecutive quarters again. Okay, and this may lead to another recession. So they are not really out of it yet. So this is just like a close shave for now. All right, so for the UMBA, okay, National Bureau of Economic Research. So this is a body that determines whether US is in a recession or not. So as long as National Bureau of Economic Research have not given us a statement, okay, they are not in a recession. So until they say that, what is their own definition of a recession? Their own definition is a recession is a significant decline in economic activity that is spread across the economy and that lasts more than a few months. Okay, more than a few months. Okay, so that is their own definition. So only UMBA has the power to declare that the US economy is in a recession. So right now, all we have to do is wait for them to call the shots. China. China COVID-19 lockdown has caused the IMF to lower its expectations for China's GDP growth in 2022 from 4.4% to 3.3%. So the country had a target of 5.5%. Okay, so the GDP growth has dropped by about 2.2%. Okay, so which means China is somehow not far away from the recession, but it's not official yet. So we are still watching and waiting. England, the Bank of England's Monetary Policy Committee has confirmed, okay, that the interest rate will rise by 0.5%, which is 1.75%. Okay, in what was a single rate rise since 1995. Okay, that was their single rate hike. Okay, since 19, that was a long time ago. And it's also warned that the UK is likely to fall into recession in 2022, maybe by the end of this year. Okay, so this is a pointer that the English, the UK GDP may be going down before the end of this year. Okay, so we are still watching and waiting. Of course, IMF's projection. So let's see what happens, if what the IMF said eventually is going to happen or not. Okay, so let's watch out. Thanks for your attention, and don't forget to visit www.tradelandfx.com. Open a live account with us and trade with us. You'll be glad you did. See you in the next video.